Hello guys, we are back, ACY cast number 2. So if you didn't watch the first one with Peter Pan, just go back one and watch that one. Was very, very nice. But today we are here to talk with Nathan Bray. Thank you so much to come here.
Pleasure.
Nathan. Nathan is a price action trader, technical analysis, he works at ACY Securities as well. Been trading for 15 years?
Yeah, definitely. With currencies for over 15 years. Yeah.
15 years, yeah, there you have it. What made you start trading, basically?
When I was a younger person, I should say, I was a stockbroker.
Okay.
I found, broking using, with stockbroking, you're using a lot of fundamental analysis on individual companies and what their prospects might look like, what their PE ratios might look like, how similar type analysis of interest rates and GDP might affect the stock market and might affect a company.
Yes.
I found from there, just sort of layering more and more analysis on top of each other, that I started to use charts. Interesting story. My first day as a stockbroker.
Yep.
We had charts drawn on a whiteboard, and my job at the end of a 4-hour candle was to draw the candle on the whiteboard, right?
Oh God.
This is a pretty old school, and as you can tell, or may not be able to tell, definitely in my mid 40s, so
good shape.
As technical analysis started to become more mainstream in far as its use goes and the technology goes, it definitely became something I just became really excited about.
Okay, so basically, of course, you didn't start with Forex already. You started with stockbroking.
Yeah.
Okay, in Sydney?
Yes.
Cool. Okay, I like the thing that you go and draw the candle. But Jesus Christ, that takes a long time to do, man.
Well, it's not that many. It's only like 3 candles a day if you're using a 4-hourly, right?
Yeah, but then you receive okay, so now I'm interested. I have to ask that. So first of all, you have the last candle, right? And you receive the open, of course. That's the close, the previous close.
Yep.
And then you have the high, the maximum,
Correct.
and the low as well. So you have to actually draw it.
We drew it in. I mean, there were obviously computers, but we were doing it as an internship too, for interns to be there too, because I guess back in the day, we were learning from really old school stock traders, and they really felt like getting your hands on the chart, understanding what price actually means, and then adding it so that you really got a feeling and you got a sort of an intimate connection to price. It was something that was sort of done.
Got it.
And then, of course, so much data became readily available.
Okay.
I mean, it used to be end of day data.
Yes.
You used to get end of day data, and then you'd literally just had yesterday, and you'd sort of watch price today. So it was a very different environment 20 odd years ago. And from there, Luca, I just started understanding with currencies that price action as a medium of exchange becomes something even more valuable. So, and you also notice that as opposed to stocks, I found that a currency is a medium of exchange between two parties. So it's something where, unlike a Tesla or a Bitcoin, where price, because they've come out with a great car and they've got a new director and it's become very popular, etc. Prices could just go up and up and up and up and up, which we've seen, right?
Yes.
But with mediums of exchange, you find with currencies, they sort of trade between levels, right? Which we would call a technical price action level. Otherwise, people can't afford that currency, okay? Or they're looking at something going, that is just way too ridiculously cheap. So using technical analysis seemed to be able to, be more significant when trading currencies. On top of that, you've got price and you've got volume. So with a really consistent, regular volume in currencies, I found technical trading became
more suitable for you.
More suitable. Yeah, so true.
That's good. That's good. We work pretty close with each other here at the office, and we always have not a discussion, but we always have. I'm more fundamental. Nathan is more technical, but in the end of the day, we sort of have the same results, pretty much.
Yes.
The same direction of the market.
I kind of use more. I guess I just would use fundamental, of course.
Yes.
Absolutely.
Yes. No, I know you do. Yeah.
And know like what's driving markets.
Mm-hmm.
And I just use technical, I guess, more because trading is about timing. You've got to get your timing right a lot of the time if you're trading. So therefore technicals can potentially assist me in understanding significant time and distance, you know what I mean? That's sort of what I use.
Using the fundamental to see where the market is going and technical to get an entry point. I completely agree with that. And that, that's nice because coming from stockbroking all the way to leading with stocks, and coming to trade CFD, that you don't see it, and you just have a MetaTrader 4 or 5, and
that's right.
You buy or sell it. This is a big change, actually. Leading with people and calling people to see if they want to buy stock or sell stocks. All of those things. It's pretty interesting. And I got a few friends that are stockbroker, but most of them, as you say, they are more old mind. They like more old stuff. So they are more like, okay, you need to touch, you need to draw, you need to do all of those things, you need to call people. It's a sales job, basically.
Well, there's both parts. You're either an analysis job or a sales job.
Oh, okay.
But that just became, pretty blended, as in Australia, definitely.
Yeah.
But absolutely, you needed to be able to communicate to clients and allow them to really make a decision.
Mm-hmm.
And often those decisions had a time factor associated with them. So,
okay, cool.
And the scary part is, you think about how much superannuation is in Australia. Half of everyone's super is in stocks.
Yeah.
Whether it's overseas stocks or Australian stocks. So you got a real sort of feel for the whole of Australia is invested. Not the whole of Australia, but a large portion is really invested in these stocks. So
there you go.
That really started to become a thing where, it became very pertinent. People started to have a significant interest.
Very popular, yeah.
Very popular, a bit like everyone wants to talk about housing.
Like Bitcoin.
Right? Now Bitcoin, exactly.
Let's not talk about Bitcoin now because it's not a good time to have Bitcoin, I think. Anyways, cool, man. All right. And then, how you ended up on Forex, because I got it the way you came from stockbroking, and then how you here now?
Look, when I was stockbroking, the old version of CFDs.
Yeah, right? Exactly. That's what I mean.
Was
exactly.
warrants and options. Yeah. Right. So problem is they had a time decay. You really had to get your timing right. So we were doing lots of writing options, trading warrants and options, using those to hedge positions for longer term investment, things like that. And then suddenly this thing came along called CFDs, right? Where there was no time decay issues. There was no major delta kind of variations and things like that. So it became, I would say, the Bitcoin back in the day, right?
Back in the day, okay.
It became like, CFDs became a better, more usable tool, okay, as far as leverage and trading
Leveraging
goes.
it. If you don't have money, not a problem.
I remember when short selling came in with stocks, and, obviously he wouldn't have even been born, I don't think.
I don't think so.
But you needed to put up 20%. Okay.
Oh, it's like buying a house.
Well, you were selling stocks you didn't own.
Oh, okay.
Oh, yeah, it's like correct.
You do an initial deposit to.
And of course, if it goes against you, okay, that was whereas now you're in such a leveraged position, okay, where you don't have to provide that much as leverage. But I do remember people using them as hedging tools. And I sat there and it was a bit like how I now feel about Bitcoin. I was very nervous about this idea of short selling stocks, and I think once you start to get your head around it, like any new technology or any new instrument, you know, it starts to be something that you're comfortable with and that you better understand, and you can kind of move from there.
Okay, cool, nice. All right, good. You know, of course, I know Nathan already. We are friends, and you mentioned a story of your life, but we didn't have much time to talk about that you was trading to pay the rent. It was something like that. I'm very curious to know that, because that was a lot of pressure, man.
Yes, it was.
It's a lot of pressure.
It was, but it was self-induced pressure.
Okay.
Right? Like it was, I was working as an analyst and looking after clients, but traveling, you know, in foreign exchange, but traveling through to China, Shanghai, Singapore, Hong Kong, and then back here looking after big clients over in New Zealand. So I spent a lot of time traveling.
That's cool.
Visiting clients. It was a fun time. Occasionally back over to the head office in London, etc. But suddenly COVID happened. Right?
Oh, that's recent.
So this is like
what?
You know,
I
3
thought it
years
was
ago.
years ago.
I've been working there for years and years. Suddenly COVID's happened and there's no traveling.
Yeah.
There's no, you know, and one of our biggest clients, you know, was a big travel company which went through a lot of trouble, right?
Well,
so we're talking a big one too. So think of the biggest travel company you can think of.
All right.
Right?
Okay.
So suddenly they were in a position where they couldn't, we couldn't travel first of all, and there was some issue with their needing lots of liquidity, you know, etc. So we were in a position where I was stuck at that time on the Gold Coast, and I thought, well, I can't really go anywhere.
Bad place, hey?
Well, it wasn't a bad place, so
I'm just joking.
I was like, right, this is what I'm going to do. I got an apartment at the Hilton on the Gold Coast for a year, and I said, I'm going to pay the rent, trading the market on the Hilton, right? And I was also going to start a podcast called Unemployed, Trading the Market, Living at the Hilton, right? This was the plan, because
Dave,
it was just my mates, right? It was just about 5 mates, and so we were like, right, let's do it, and it went extremely well, because at the time it was a really strong US dollar trend.
Okay, just buy it.
And I all I remember is spending so much time kind of bored, because I was in my apartment. There was a lot of lockdowns going on.
Yeah.
I just spent a lot of time walking on the beach, because I'd be like, gee, hasn't been a big lot of trade setups this week. You know, it'd be 2 a.m, and I was just walking on the beach. Didn't need a mask. Life was good, but you know, I was a little bit nervous, because and keep in mind too, it wasn't like I needed to make that money to pay the rent. It was more of a $10,000 in an account. Let's trade with the goal each week that we're just going to pay this sort of, and keep in mind, COVID, rent was cheap, right?
So true.
We got a great deal.
Well, but he was living at the hills first,
right?
of all, the Hilton.
So,
okay.
That was that period.
Yeah,
and then from there, my fiance and I were like, right, it's time, in case if this COVID thing happens again, let's go and move to a big company. Let's move to Sydney, Melbourne. Okay, and this is where we are. So
that's
my
nice.
trading mentor, 15 years ago, Duncan Cooper.
Yeah.
So he is our senior market strategist here, does all our webinars.
Yep.
So Duncan and I used to trade literally sitting next to each other for many years, and Duncan was definitely my technical mentor. I thought, stockbroker, I know everything.
And you know,
okay. And it was, you know, something where I really needed to be polished.
Yes.
And I really needed to sharpen some skills. So spending that time, Duncan was with ACY.
Oh,
and
he was,
that's where I put my hand up and I said, you know what? Duncan says it's good. I'll go down, and this is sort of how I came to be at ACY and how I came to Sydney. Nice.
That's really nice. And, you know, you say that you thought you know everything, and this comes across a lot when you're a trader. Yes. You think you know everything. Yep. Always you think you know everything. Even me, sometimes I think, oh, this is already I don't need to listen to those dudes. But you know, I say it into the last podcast, I'm going to say it again, you always have something to learn with someone. Always.
Absolutely.
And, you know, if you think you don't, then you're not good enough, you know, because you're always going to have something new to learn. Even if not something you're going to use, but have the exposure to that and listen to new things will make your brain think more. And okay, maybe this triggers something on your brain, and then you go and learn something.
Yeah.
But yeah, all right. Congratulations for that, man. It's a very, very nice story, to be honest. This is why I want to bring him here. There's so much stories. Anyways, right. So now we are here trading Forex.
We are.
You trade spot Forex, CFD, right?
Yes.
And is it you trade more G10 currencies, or you trade every currency that has charts?
More G10.
More G10?
G10, I'll also trade, you know, gold and some indices.
Oh, a bit commodity and indices as well. Okay. And what do you know, because we have so much instruments to trade, and I think a price action can be applied in anything that you can have data, you know, as a candlestick, and you can represent what happened to what's going to happen, right?
Absolutely.
Right. So
I think so.
How you do that? How you find, okay, I'm going to trade euro dollar, or I'm going to trade S&P 500. How you decide that? Is there any particular method you use, or?
Yeah, for sure. I mean, the method I use is, I find, like, we've got two ears and one mouth, and I have a big mouth, I get that. But, you know, I'm listening to what the market's telling me, and the way the market talks to you is on a chart, and the way we make money is price. Okay, so a lot of people will look at technical analysis and they'll be saying, oh, you know, it's just a line that you've drawn on a chart. But you know, and that was sort of my view always. I would just use it as a guide, technical analysis. It wasn't like I'd sit here and say, oh, the market is going to respect, you know, different levels in the market, etc. So, but then I started thinking, okay, so it's a line drawn on a chart. So what about a line drawn on the chart of the world? Like, what about a line drawn in the middle of the road? So you might have an attitude where you think it's not about the line you draw, it's about the representation and the meaning of what that line means. For example, try to go to Mexico and cross that imaginary line drawn, right, to America. I mean, that imaginary line is so meaningful, people dig tunnels under it.
Oh, wow.
Right?
Yeah.
So then, and if you go from one side to the other, they're suddenly using a different currency. They have a different government. They have different rules. They have different police forces. So I looked at it and thought, you know what? That's a meaningful line. However, there's lots of non-meaningful lines, right?
Yeah. You have to filter.
Like I drive down the road, and you know, you can literally see a line in the middle of the road that people respect and that people survive. And if you cross that line, you know, you can get in trouble. So then I started to think about, do people trade? Yeah, people trade. Do people drive cars? They drive cars. Do people live? Suddenly there's a way of looking at lines and price action to get an understanding of what that line means, or what the meaning may be behind it. And I think because we're all paid in price, right? No matter which way you trade, I'm able to say, well, yes, I'm going to draw a line, but the line means something as meaning. And because people respect lines, then and people buy and sell things using cash, then maybe those technical lines could become meaningful psychologically to people as well. And that to me is a way of kind of understanding how price action can be important in trading.
Okay, wow, that's really good. I like the explanation, and you know, I think price action always comes down with people, society as well, because everyone is seeing the same thing, everyone is seeing the same. So
and is it a self-fulfilling prophecy as well?
Exactly, everyone, exactly. So that's pretty cool.
Right?
That's
like
pretty cool.
Yeah.
All right, so you basically look at pure price action when taking decisions, or you have any other indicator you use, because you may have confirmations, you know?
Correct. And
okay.
when I say price action, I'm thinking more about, look, to use a really crude example, and I do apologize to anyone that might like this. I think about it like I want to be able to have multiple confirmations existing at the same time in the same level.
Yes.
Okay, before I would consider whatever my entry criteria is to trigger a trade entry. So think about it like men on Tinder, right? They might like to match with every girl, and they just want to match. And sometimes trading, it's just about I want to be in a trade.
Yes.
I just want to be in one,
you just want to click it.
Whereas maybe some people, maybe females are like, no, I want to find the perfect guy or girl, whatever they're into, and they want to see all the criteria met. Okay, so when trading, or my price action approach is, I want to see multiple reasons why I would match with that trade.
So you like a female on trading?
Well, right, like that's, and it's not easy to do, right? Like you need to say, hey, this is, and, and of course, it sounds very sexist. I don't mean it like that.
No,
just purely to show, hey, this could be a pattern.
Exactly. I completely agree with you.
Luca, have you been on Tinder?
I don't know.
How would you describe that?
Maybe I do, maybe I don't. I don't know. We have to check.
I'm still 38 on Tinder too, which is great.
You never change it?
No, of course I'm not on Tinder.
I think I'm
not anymore.
19 there or something like that. Anyways, very good. Okay, now let's talk a little bit about market. So I get how you trade, so that's very cool. And just before we move for the next topic, I would say I want to give some words into the ticking box. I think you need to have a trading system. You need to know, like, okay, this is what's happening on the market right now. Let me check. Let me get my checklist and see if I can find a trade here. I'm just going to give an example. This is superficial. This is not my trading style or nothing like that.
I won't hold you to it.
Oh, it's all right.
It's fine.
It's crossing above 200. Okay. It's stochastic is doing this. Okay. Price is at this point. Okay. Support, resistance. Okay. Then you're going to have an end result, and then you will be able to trade. If something there is not tick, then you don't trade. I think this is one way for you to maintain your confidence, because it's the same thing. Is you have we're gonna go for a race, right? We're gonna go for a race. I'm gonna race my car against your car. And I have a Ferrari, and you have a Mazda. Right? What are the chances for you to win?
Well, I would hope not very well.
It's gonna be very, very low, right? Because I have the stronger car. So if I know that my car is stronger than yours, what I need to be afraid? If everything already ticked my box, so my horsepower is bigger than yours, my wheels are thicker than yours, my wheel, it's everything better than you. So I don't have to be afraid of open a position. I go and open a position and follow my trading system. I think this is the main point of following it.
And knowing that you don't know.
Correct.
This to me is the number one thing that I know Duncan Cooper really taught me. He just said, listen, we don't know, but our goal is to be able to say, if, as you said, the boxes are ticked, if I did this 10 times, would I be profitable?
Exactly.
Because the proof is we don't know. So what we're trying to do as a trader is improve our probability, manage our risk and manage our return. So that to me is such a simple approach, but it's one that using a systemized approach gives you that confidence.
Right? You need to have a systematic approach to your trading. Otherwise, you won't survive for long. You may survive for a week or a month, but it's pretty interesting, because I was looking at a study from institution. I forgot the name of the institution. I always forgot the name of the institution. Anyways, but they gave the same capital for two different traders, for a retail trader and for a professional trader that was trading for a fund. The retail trader was profitable. He was not bad. He was good at trading, but he was retail trading. He was trading for a long time, but he didn't have the same approach as an institutional trader.
Okay.
They gave two scenarios of market for them. a very volatile market, right? And a normal way market, so market moving but not moving much, right? So the end result was, so on the very volatile market, the retail trader made huge profits, right? But then he lost a lot as well. Right. So he made, like, let's say, I don't remember, like he made 100%, and afterwards he lost 80%.
Right.
And then the institutional trade, he made a little bit, but he was consistent. Right? He was taking the volatility of the market
and drawdown as well.
And drawing down as well, consistent.
Yeah, got you.
All right. So the retail trader wasn't following the trading system because he was getting emotional. So many opportunities that he was entering every opportunity. Mm-hmm. The institutional trader, he had an institutional approach, so he knew that the first thing he would look is the risk. So if the market is so volatile, I can't be exposed that much of my equity, of my AUM into the market.
Yeah.
You know? And then the interesting is, the retail trader on the normal market, the not too volatile market, he kept losing because they didn't have volatility. So he was sort of gambling into the market.
Absolutely.
And the institutional trader was continuing making profit. Why? Because he was following the trading system. So he always giving like a few trades. I can't remember exactly the name, the number of trades of each one, but the discrepancy between the traders that the institutional guy took and the retail trader took was like so big. I think institutional trader took 50 trades in 3 months' time, and the retail trader took nearly 500 trades. Something like that. So nearly 10 times more. Something like that. It was really huge difference.
Absolutely.
So I think you need to...
Which describes my Tinder metaphor, right?
Exactly. Well, right? Exactly the same thing, yeah. But like
it's literally the retail trader is just matching with everything.
Matching it for everything.
And not going,
shooting everywhere.
Yeah, correct, potentially. I don't know what their trading method is, but... and not knowing what's happening in the market, but following your strategy to the T, allows you to work out whether it works.
Yeah,
right?
I agree.
Just whether it works, whether it's profitable, and then secondly, you can kind of go, well, is there some area I could tweak? And now I can like have a something to go off, like 100 trades here. I can grab a block and I can say, right, how is this performing? Problem is, I used to have a broking mentor that would sing songs to me, right? If ever we spoke about emotion. So he'd be feelings, nothing more than feelings, right? When we went, oh no, I feel like they're going to raise rates tonight. And he would say to me, he would sing, and he had a very bad voice, way worse than mine, right? Which is bad, okay?
No,
but he would sing and say, you're not here to have feelings, mate.
Mate.
No one's interested. Your trading strategy doesn't involve feelings, because feelings can be irrational, and suddenly your trading becomes impossible to kind of measure its success or failure, if that makes sense.
No, it does.
So therefore, trading can become incredibly boring. It needs to be.
I get your point.
It needs to be a lot of waiting and a lot of boredom.
And exactly what I want to talk next, actually,
right?
Because I think we're very linked here.
Right.
Because I want to talk something. You don't need to have a busy life to be a trader. You need to have a very boring and calm life. Not boring on things or I don't know what to do. You need to go to the gym. You need to exercise, see people, go for a walk, something like that. But I'm trying to get the point of you can't have so much things to stress you.
Yeah.
You need to be on a clean mind. You know, and Anton Crew, I don't know if you know Anton Crew, I think one of the biggest traders, institutional traders that came first on YouTube. He traded for Goldman Sachs and who else? JP Morgan as well. He always say that if your trading is not good, your life will be not good.
Yeah, wow.
If your life is calm and peaceful, your trading will be good.
Right.
Because you don't have to be thinking emotionally.
Because you're kind of in a medium,
exactly.
almost like you're the moving average in your life.
Exactly.
You're not pushing one side or
Exactly,
the other.
exactly.
Okay.
Yeah, look, you can have a look on YouTube later on. But anyways, right, let's talk a little bit about markets now. So
Let's talk about it.
we had, a busy week, actually.
We did.
Very busy week. Federal Reserve, European Central Bank, and this afternoon we had the BOJ.
Yep.
So what are your takes on that? So we paused, FOMC, as I mentioned on ACY analysis, we post every day, they paused. I think you made a video on that as well.
Earlier in the week we were talking about this.
Exactly. Yeah. So that was a good one. We got it. And then yesterday at night we have 25 basis points by ECB. Sorry, guys.
As expected.
As expected already.
Yep.
We already mentioned that as well. You too. And then today we had the BOJ maintaining unchanged. That's not a big news. But what's your take on talking about a little bit about fundamental aspects? So what's your take on FOMC and ECB? Let's go for FOMC first. They pause. What's your take there?
That's right. I mean, okay. So the way I looked at it at the start of the week from a technical perspective, from where price is at, I could see that the dollar index, which is the thing we could look at.
Yep.
Or if you want to look at the euro dollar, which is an inverted dollar index, really. Mm-hmm. Okay, if you look at it on a chart, I'm looking at the fact that we have this range from 105 up to about on the US dollar index 100.80 major support level. Then all the way up to about this 105, 106 kind of level in the dollar index.
Correct.
And I started the week off thinking there's so much uncertainty. So price was sitting just smack bang in the middle of the range. It was 50% in the middle of the range. As a technical analyst with all the world players, from banks to retail to whatever, it's like they didn't know. It's right in the middle. So I sat there going, there's no real clear indication. The market, I'm opening my ears and the market's telling me it doesn't really know, because otherwise surely it would have gone in one direction or been favoring one direction or the other. So therefore I'm thinking, okay, do I really want to flip a coin and trade here? Like when the price is sitting in the middle of a range, sure, I could be right, but I could just as easily be wrong. Or we could get a bit of volatility off that as news is dropped. So my view was to look at key levels on either side of the range. Okay, either top or bottom of the range. And I was looking to say, well, if this range, we look at say a 79, 62 fib retracement level on both sides of the range.
Yep.
Those are the levels there this week that I was like, if we get price to either whether it's going down or up, if we can see that price is rejecting or failing up at these levels, then to me, I was thinking that would be, other than that, when the surf is cyclonic, right? Yeah. There's a big storm coming, it's raining. I don't even bother swimming that day between the flags, right? I was like, I'm just staying out of this market until we know, until the world is more sure than it is, because right now it's 50-50. That was kind of my view. And as of this morning, technically, price on this, let's say the euro dollar or the dollar index is now right up or down the bottom of that 79% level, which is up around this 109 kind of 43, I think, from memory.
Yeah,
that's the level there. So price is pretty much there now. So it's the trend is down. It's a previous level of support, okay, in a range that could become resistance, and it's a 62 fib retracement level. So to me, that has 3-4 reasons why I'd be interested to see how the market reacts to that. And price is kind of there now, or we could get a move higher to 110. So that's where I'm sitting back and listening to say, okay, we got a lot of volatility this week. And what is the market going to do here? Now, if it busts through it and goes higher, then I might look just purely at top and bottom of the major range. But that was sort of my strategy coming in and my thinking ahead and going, we could get good data, good data, bad data. We could get really bad, really good. Do you know what I mean?
Yes,
type of approach.
Yeah, because this week was pretty good in trading wise. If you trade rates, because it was widely expected
Yep.
that the Federal Reserve, the Fed, would pause.
Yep.
You know, and we had another confirmation just a few days before from the CPI that came negative, you know, less than expected, sorry. And then I think there was a big confirmation of them saying like, okay, we're going to pause. So it was very, very widely anticipated already. And then as well, we have the ECB, very widely anticipated that will do 25 basis points.
Yeah.
You know, so there you have it. Like we have a quote raising rates. We have a base raising rates and we have a quote pausing rate. So euro dollar, I took a nice long position on euro dollar. I even posted on my Instagram stories for those who follow me on Aussie _trader. And you know, I think with that level now, approaching that level, I'm thinking as the same thing as you, to be honest. I don't want to keep my longs for too long, but I want to check what the price will do on this level, and if it's going to reject, if it's going to go through. Well, if it's gone through, I already closed my longs, and that's it. I'm following my trading system, and that's it. You know, I could have more long positions, but I think I would be too egocentric, I would say. No, more trying to.
We just don't know.
Yeah, we just don't know. Yeah.
Where are the influencers of this market going to start either selling, or is this just? I mean, for all we know, this could break through and continue a higher trend, right?
Yeah, correct.
So as far as the euro goes, that's where I feel like I need levels for multiple reasons, and I need the market to show me it's changing direction. Now, the problem is I don't know how long it's going to change direction for. No one does, right?
Yeah, no one. Yeah.
But I'm using it to be able to gauge my risk. So, for example, this week, and here's an example of winner and loser.
Yeah.
Okay.
Yep.
So I've been trading because the longer term trend on the Aussie against US dollar has been down. Mm-hmm. Okay. Each time it rallies up to this 68-cent level, which is a fib retracement level on the longer term trend and a weekly resistance level, right? I've been literally doing a simple trade where if I get price start to reverse there, I enter a trade 100 pip stop, okay? So over the last few weeks, it's failed there 4 times, okay? It's literally rallied back up in line with the trend, fail, right? Yesterday, it breaks through. So let's say I had the simplest technical trading strategy and I just said 100 pip stop. I'm right 3 times, okay? And let's say I was in this yesterday, but it didn't fail there. It just burst straight through. But let's say I didn't bother about that. Then I'm using it to say, okay, I lost 100 pips, but I was making at least 200, 2-to-1 ratio on the trade. So it's a simplistic approach, but it's one that you can sort of go, well, you know, okay, so it's guaranteed in effect because resistance isn't going to hold forever.
Yes.
There's eventually going to be a truck that doesn't follow the road rules. That could kill you.
It may be junked.
Like that road, there's going to be someone crossing the border, like that's going to happen.
Yep.
Okay, but I'm using them more as price points and guides. And as of this morning, stopped out on that trade.
Okay.
But overall, that trade so far has served really well. And I mean, that sort of gives you a perspective on on how we know when it's up there, that the fact that it's putting in higher bottoms too and testing it, we're like, this is going to fail, probably, right?
That's it. That's really nice, really nice.
Yeah.
Anyway, so now let's move for a few Instagram questions.
Sure.
I have a few guys that follows me on Instagram, and they have a few questions here for you. I made a, like the box where you can ask questions, and then
awesome.
I told them that you're gonna be on the show, so they made you a few questions. All right, so
is it my mum?
No.
Is this my sister? Like,
it's actually. I think it's your wife. No, I'm joking.
Yeah, absolutely.
All right. So, first question is how to become a great trader. So, basically, the question would be, how can you be a better trader? How to become a great trader like you?
Well, I mean, I wouldn't say I'm a great trader. Do you know what I mean? I've been doing it for a long time, and have. I would say, and we do have a product in here called Quick Start, I would say you need to trade a strategy and stick to it. So
Yes,
follow your rules.
A proven strategy.
Well, it doesn't even need to be profitable. It just needs to be you follow it, right? Like the first step is a lot of people, things are happening. Oh, I'm thinking this, I'm thinking that. It's more about showing, like you said, the temperament.
Yeah.
Right? Getting yourself to a place where you literally just go, right, set up, trade it, set up, trade it, set up, exit. This is what I'm going to do. And you get used to it. And during that period, you start to go, why did some work and some didn't? Is there any reason? What can I then layer on top of that? Or what do I need to get rid of that isn't useful for me? You know what I mean? So it becomes a process of doing it pretty mechanically and getting used to it, then trying a completely different strategy and doing the same thing. And I think what you find is you start to work out that what is your temperament best suited to. So I know when I was trading with Duncan Cooper, not to brag about him, but I remember we were shorting the Aussie dollar up at 96 cents. And Duncan said, I'm holding this trade down to into the 50s.
Oh, wow.
I just couldn't handle that.
Oh, wow.
I was going, man, if I'm up 500 pips, I'm out. Wow. And if I'm up 200 pips in a few hours, for example, and it can happen, I'm out. I'm putting that money in my account and looking for another opportunity, right?
Yeah,
whereas
getting equity. Yeah.
Duncan has this ability, right, to be quite calm, even though, like, at one point it went to 96 down to about 75, and then it went back up to 86. I'm like, you literally just nearly, you were up 1,000 more pips, mate. Like, what? And he's very calm and he can deal with that. Whereas I'm not.
Let
I'm
him
like,
cook.
let me take my profit, and then I will wait for this to come back up and maybe present another opportunity. So what I'm getting at is it's really about finding the trading style that suits you psychologically. Like, for example, when I trade shorter term trades or swing trades as opposed to longer term trades, I have two separate accounts, right?
Oh, yeah.
With two different brokers.
Yeah, I think so. Yeah.
But that's purely psychological because the reality is
It's the same money.
it's just one trade, right?
Yeah.
So what I'm getting at is I feel like to answer that question, it really helps to work out too who you are and what sort of trade you like to do. I can't have a phone or any device in my bedroom because when I'm sleeping, there's no looking at the markets. There's no having the ability.
Yeah, exactly. I think there's I
these kind of
agree.
Rules.
Exactly. You need to. You don't have to be addicted on MetaTrader 4.
Like
you can see a little bit later. You know, like I think prioritize a few things before trading. It is what's going to make your trading better.
That's right. And finding out who you are and what your temperament's like and suiting your strategy to that.
Yeah.
You know, whereas for me, it was making really strong rules here to help me. And then after trading different strategies over time, I kind of went, right, this one, I feel best.
Feel the best.
You know, like I'm okay with this. This is kind of my approach. And that's what I would say I think it allows you to become profitable over time.
Cool. There you have it. So first questions, first answer. You know, I wanted to say something. Don't take it personal, guys, but I like to call the traders that stayed in the chart 16, 18 hours looking at the chart the shrimp traders. Because they always like that.
Wow. Right. Yeah. I like that.
Anyways. All right, next question. Can you share any specific example of successful trades you have made based on technical analysis? Do you remember of any? Maybe
Absolutely.
This week?
Well, this week I just mentioned that 68 level on the Aussie dollar has been, it's profitable over the last few months.
Mm-hmm.
But the one, and this is where, when you get, and the reason I harass Luca, don't tell HR that I harass him, but when I ask him a million questions is to really understand the big drivers in the market, fundamentally, what are they? And what I want to know is when they're like when they're diametrically opposed. Like when Luca's saying to me, hey Nathan, no, this is fundamentally a direction. And technically I'm looking at it going, hang on, that doesn't, the market isn't pricing that at the moment. Okay, so it's a bit different. So what I like to do then, an example I'll use is oil. So during the Ukrainian military operation, whatever you want to call it, right? There was fundamental calls for good reason too, all right, based on a $200 price in oil. So I was looking at that going, oh wow, could you imagine? And they're doing it based on, okay, what will happen if a serious war breaks out and etc. Right?
Yep.
And it made a lot of sense. So I was watching it and I was looking at a really weekly high level, okay, in oils, trading up at about, I think it was about 114, okay, $114 on West Texas.
Yep.
And I'm like, that level doesn't break. That level, people don't want to pay more than $114 for West Texas since 2011, right? So I'm looking at it going, this is sort of a roof on what people want to pay, okay? So I watched it and suddenly it spiked through, okay, at that 114. And it matched a lot of that indication, but and the fundamentals were a little bit uncertain, but very clear that this was going a lot higher. So my view then was, all right, I want to see this month price close above it. Like I'm looking for the market to tell me.
This and yes.
Right? And it closed below it. And I thought, okay. And resistance can take a few goes before it's broken, like this Aussie dollar, right?
Yeah.
Next month, suddenly I'm looking at it going, this resistance is holding from a technical perspective. So therefore, going against all of the, I guess, CNN, BBC, everyone's screaming, a war's breaking out in Europe. I'm thinking, gee, there must be, technically, the people who need oil aren't paying it. So
yes,
maybe those players aren't as excited about what perhaps we're getting through media, etc. So to me, that was a successful short where people were screaming it's going to $200 and for all these reasons, but the market wasn't doing it. So I would then revert to what the price is being paid or not being paid. And as we've seen, and we didn't know it at the time. I'm not suggesting I had a view, this war won't break out or, it's already still continuing, which Clifford Bennett here, I didn't believe him, but he nailed that. He said, this is going to be an extended, issue, which it has been. But price failed there, and therefore that was an example of a short trade, which has come all the way down, and trust me, I wasn't in it the whole move down at the moment. But it has failed significantly. And that's kind of where I guess the dance that we do is trying to understand the driver of the market, but also understand what people are going to pay.
Pay or not. Yeah,
and that's
I completely agree with that. That time was very, very exciting on trading wise, I would say. Because it was a pretty interesting market anyways. Yeah. Cool. Next question. So we have this one here from Instagram question as well. What is your perspective on incorporating fundamental analysis alongside with technical analysis? How you do, what's your point of view with fundamental and technical together? I think we talked about that before,
Look, I would just say the thing I was, mentored when I started trading was it's about why, what, and when. So your fundamentals of the why is how it was explained to me. It was saying this is what's driving the market and why, okay? What's happening is your data, which we can all see fundamental and, data comes out, gives us, like you perfectly said, you knew. And the market started factoring that in. It was almost, you nailed that to the minute where it was like Monday morning, Asian session, not a lot of trading might go on, and suddenly leading up, we had price going up 100 pips, 150 pips during the Asian session. Yes. So it was almost like the market kind of agreed with you.
Because it was a very easy trade on Euro-dollar this week, to be honest.
Like it traded off and it went a lot higher.
Yeah.
The question now I want to see if they're both like, it's like, the way I see it, it's like a marathon. The US is winning the marathon. The US has reached 5%. Europe raised late. They've still got 15 kilometers to run in this marathon. So, yes, the person crossing the line, the US at 5%, is still in front on a carry trade, right? So they're not going to, they're not completely weak, but as they're suggesting, they're kind of in front, okay? And they're getting some weakness as a result of the tightening and the data's coming out weak. My question now will be, the person who has 15 kilometers to run in this marathon to catch up to the US, right? Are they going to start to see some tightening affecting them now? Like, are they going to be able to finish
again? Yeah.
So I feel like that's the way I'm looking at it right now. And the market is saying it's in this range. So do we start to now look at next week? I know we've got a lot of manufacturing data on the euro.
Yeah, we do
so
on the euro, yep.
Do you wait that long though? Like, it could be end of the week before.
Yeah, look, my point on euro dollar right now is, I get your carry trading, because USD has higher rates than Europe at the moment. But with this pause, I sort of get my hands.
But are they saying they're going to continue?
Yeah, that's the point. So
do you believe them?
I do believe on them, on FOMC saying they will continue to raise if they're going to be data dependent approach, right? But I was hearing the ECB this morning, and I even got some notes here. And they basically say they don't want to cut rates. So they don't want to cut rates. So they won't cut rates. They will maintain the rate. So they will pause if needed. But the main point is to continue raising. So they will continue raising. They won't cut. If they need, they will pause. But they won't cut until the end of this year, right?
As they're saying what, month on month? Sorry,
month over month.
Month on month. Gotcha.
Yeah. So they have a few more base points priced in to do. All the inflation was revised up, right, from past month. So now we have a 5.5% for 2023, 3% for 2024, and 2.2% for 2025. Right.
Wow.
And as well, she mentioned that inflation remained high and is expected to continue high. So this is why they revised it up. The growth was revised up as well.
Yeah.
And they will discontinue the asset purchase. Right. So with that, I think they will continue raising. I think the US dollar will be very, very data dependent approach, to be honest. So I don't have much on these to talk about.
But do you expect weak data coming out now because they've raised?
From US?
From the US, sorry.
Well, because they pause. I think now they are feeling a bit of the effects.
Right.
They're feeling this time because we have to talk about this. They don't raise now and they will feel tomorrow.
Unemployment claims are up.
Yeah, they need a little bit time for the rates be affected into the economy to be factoring, right? So,
I think you said to me it's 3 months.
3 months.
Takes 3 months for it to even be felt.
It can take 3 months to 6 months. Yeah. Oof. Yeah. So maybe they will get a recession second half this year or maybe first half next year. That's what I'm being saying. Yeah. Anyways, last question. Can you share any lesson you have learned from your trading experiences that have significantly impact your approach? And that's it. Last one.
I would say the number one thing was risk reward.
Okay.
Right. I know it sounds boring and simple and everyone goes, oh yeah, I know that.
Don't want to talk about that, yeah.
It's like a swimmer saying,
I can swim.
Swimming fast helps. Like, I know, I get that. But there was so much of saying to myself, risk reward, like I need to make sure my reward is that I'm targeting. When I enter a trade, I need to determine whether that is possible and whether there's any headwinds coming up, right? So this week I'm like, okay, the trend is down, for example. A setup occurred. We had a couple of weak days once it moved higher and it failed again. So I might be looking at that and saying technically, but then my headwind was, oh my God, anything could happen at FOMC, ECB, retail sales. Like there were all these headwinds along with what I would call pretty key support levels as well, right? For the euro. So I'm looking at that going, even if a trade's setting up in line with the trend, there's just too many. Am I going to be able to reach my target? Because the idea of doing a 1-for-1 trade might seem attractive, but you need to be so good and so accurate to make money, right? It's very tricky. So for me, I was like, when I'm entering a trade and I'm looking at the bigger picture, I need to also take into consideration what will be my reward, and is there anything that could impede that, okay, over the period that I'm looking to be in it? And if there is, I don't take the trade, because the thing I always do, and some people slap themselves on the face that I know of, I won't mention you, but I literally will, as I'm about to get into trade, I'll go, is that a setup? And I have to answer myself a bit like a psycho or no offense to anybody psycho, but to you know, like
I think no one is,
someone with multiple personalities or whatever. You have to stop and go, I'm not allowed. It's like the light's got to be green before you go. Oh, there's no one on the roads. This is a country town. It's like, regardless, you have to stop and ask yourself, taking into all those accounts, right? Not just go, oh my God, I need to be in a trade to pay the rent this week, right?
Don't do this, please.
Right?
Don't, especially in this market.
Like, don't do that. It's just crazy stress you don't need. But that would be what I'd say. Whatever your setup is, you need to ask yourself, is it? Sometimes you're like, oh, it's 2 pips away, I'm going to get in. Nah, I'm entering because I know that my exit potentially is okay, my entry criteria is met, and the level that I'm trading off in the direction is correct based on my strategy. And that would be my number one thing I'd say to people to do.
Cool. That's very good. I think even Dave is learning a lot from this podcast. Dave is our cameraman, so yeah, thanks, Dave. All right, so just one question from my side now. I want that you give them one tip for who is starting or who is already a trader, and one book or one video from YouTube or someone to follow.
Absolutely.
So one tip and one book.
As I mentioned, trading can be very boring, and when you wake up in the morning, you kind of, I'm one of these people, I dream about it. Don't worry if you're dreaming about it, it's normal. Especially if you're in a trade and you got risk out, and I dream that I lose and I win, and that's why no devices in the room. Okay. But when I'm trading in the morning, I want to find out what happens. So I use Gregory Mannarino purely because he's the most interesting, exciting. Like, you're kind of finding out what happened in the market last night.
Yeah.
By this guy, but he is just so much fun to listen to, right?
So what's his name?
Gregory Mannarino.
Gregory Mannarino.
Oh, he's just like, you cannot not, and of course, he has pretty way out kind of theories about markets and evil governments and things like that too. So it becomes really...
That's nice.
But he's highly intelligent, right?
Cool.
He's highly intelligent.
Like you.
But he makes it quite colourful.
Oh, nice.
Right?
I'm going to have a look at it.
To me, that's something I do. The book that I was taught by my mentor to read over and over again is called Trading in the Zone.
Oh, Trading in the Zone.
Trading in the Zone.
That's a good one.
You read it and then you get back and then you start it again. That kind of thing, because it's just kind of refreshing and retraining your brain, as you're trading. Because I know this week has been such a crazy week.
Yeah, it has.
And
very good.
Yeah, the head noises can be tricky. Yeah. But you say it's good, but at the same time, I'm sure you, at some point, because of the uncertainty, were nervous.
I actually could manage to not be nervous anymore. That's something.
Right. Okay,
that's something. That's something I'm very proud of.
I'm not there yet.
I've opened only 3 trades this month.
Okay.
So I'm a swing trader, so I don't trade much. And the positions were pound dollar long, euro dollar long.
Yep.
And this morning I just had a euro JPY long as well.
Like further long.
Further long, yeah. Wow. Just a 700 points, so 70 pips take profit.
Oh, right.
Yeah, and 30 pips stop loss, so 1 to 2.
And was that as the news came out on Japan?
Yeah, it was before. So I was already expecting they wouldn't change, so it would be negatives to negative rates there. So, yeah. pretty much was a very nice trade.
Good month. Good month.
Show you later.
I like it.
All right, guys. There we have it. We come to an end of another ACY cast. It was a pleasure to have you here. Thank you so much again, Nathan.
Thank you, Luca.
And please, guys, do the comments again. Ask Nathan questions. I'm going to send him the questions and then I'm going to make him answer the questions for you all. Subscribe to the channel. Give us a like, thumbs up. I'm waiting for it, so let's wait for them to give us a thumbs up.
Like and subscribe because this guy spends all day. Trust me, I've watched him. He's reading everything.
Yeah.
Right? Luca is reading and knows an answer to so many things that as a technical trader, I think, do I really even need to know that? But Luca knows it.
We help each other and that's it.
Yes.
All right, guys. Have a good one. Bye-bye.
Thank you.